This is the total amount of credit card debt in 2024, according to numbers provided by the Federal Reserve Bank of New York. And this is the number of properties that started their foreclosure process in 2024, according to Atom Data Solutions. I mean, when you look at numbers like this, it's very hard not to get scared. I mean, everyone keeps talking about a recession, and when you see numbers like this, it's hard to not believe that there won't be one coming your way. So if we're talking about recession as a fact, as something that's going to happen no matter what, I think it will be worth it to look into the signs, try to understand how to read them, and if there's anything you can do, at least try to prepare for it, right? This video was created in response to a special request from one of our subscribers. Now, before we start, let's talk about the concept of a recession. Because if we're going to talk about one, it's important that you at least understand what a recession is. So according to Investopedia, a recession is a significant, widespread, and prolonged decline in economic activity. A general rule is that 2 consecutive quarters of negative growth in gross domestic product, meaning GDP, indicates a recession. Another point that the Reserve Bank of Australia adds is that a recession is accompanied by a significant increase in unemployment. Welcome to NovaRise. In this channel, we talk about real estate investment, investing in the stock market, precious metals, and small businesses. Let's get started. Now that you understand the concept of a recession, the next question you should be asking is, what's considered healthy with these numbers? Otherwise, we will not know how to measure a significant decline. So ideally, in order to know what a decline is, we need to know what are considered healthy numbers for the unemployment and also for the GDP. So according to Forbes magazine, an unemployment rate that is between 3 and 5% is considered healthy. And in terms of healthy GDP, according to the Corporate Finance Institute, a healthy GDP growth is 2 to 3%. Anything higher than that is considered a booming economy. Why am I making an emphasis on these numbers? Well, because when you look at numbers like these, it's very easy to give in to panic because you're looking at isolated numbers. And when you look at isolated numbers, you have no context whatsoever of what's happening. And these numbers can be quite scary. But now that you understand the concept of a recession and what numbers are considered healthy, let's take a look at this. So here's a table about the US GDP annual growth rate provided by Trading Economics, and the source of information was extracted from the US Bureau of Economic Analysis. And in this video, we have a range of historical data, and we're going to make an emphasis on the last 4 quarters. Why do I want to do that? Because I want to study a full 12-month, which is the equivalent of 1 year. So far, all we have data is up to Q2 2024. This data is provided on a quarterly basis. And at the moment of this episode recording, Q3 is not over yet because September is not over yet. So we're going to go back 4 quarters and we're going to look at the numbers starting Q3 2023. Now, remember what the healthy range for GDP is. And knowing that, let's look at this chart. Q3 2023, we're talking about a GDP growth of 2.9%. It falls within healthy range. Then we move on to Q4 2023. Is at 3.1%, slightly above what's considered healthy, meaning a slight percentage above that could be putting the economy towards a booming economy. Then you move to Q1 2024, and yes, there was a slight drop, but nothing out of the ordinary. And that's what happens. Sometimes when people hear, oh, there was a drop in GDP compared to last quarter, people panic. People start selling stocks, people go crazy. But when you understand what's considered healthy, like we're doing right now in this video, you are going to notice that 2.9%, even though it was a slight drop compared to the past quarter, this is still considered healthy. And then you move to Q2 2024, and we're talking about a GDP growth of 3.1%. So far, so good. Now, we don't have a magic ball, but everyone wants to know what's going to happen in the future. And that's why we have those gray bars, because that's going to show the projections. And yes, the projections are not looking very promising, because if we look at this, the projection for Q3 is that the GDP will be at 1.6%. Then the following quarter will end at 1.4%. And next year, the first quarter will end at 1.2%. And then Q2 2025 could end at 1%. So if we're going by the definition, yes, we're talking about a drop in GDP percentage. And the percentages that we are seeing here are below what's considered healthy. However, remember that these are just projections. Nothing is written in stone yet. We still don't know what's going to happen. These are projections based on studies. However, remember that what defines a recession is not just the GDP. We still need to take a look at unemployment numbers. And here's the unemployment rate chart, okay? So remember what's considered healthy unemployment. Anything between 3 to 5% is considered healthy unemployment. I know that number might seem crazy because you will want unemployment to be as low as possible and that everyone will have a job, but that's not how the economy works. If everyone is fully employed in the economy, that will translate into the pricing that you pay because companies need to keep hiring people, and the more people they hire, the expectation is that there's more output, but then there's also more salaries that need to be paid, and the relationship will not be healthy. So for a healthy economy to take place, there has to be a level of unemployment. So back to the chart, if we go back to the last 12 months, let's take a look at what the unemployment rate was. Remember, healthy rate is between 3 to 5%. So in July 2023, it's still within healthy range. It's at 3.5. Then in August 2023, we're talking about a 3.8 unemployment. It's still within the range. Then September is the same, and then in October, it remains the same. Then in November 2023, we're talking about a 3.7%. That's still within the healthy range. Then 3.7 in December 2023, and now we're starting January 2024, still with a 3.7%. Then next month, 3.9%. March 2024, we're talking about a 3.8%. And then in April, it went up by 3.9%. Woohoo, people are getting scared. Wow, unemployment went up. Things must be crazy. The world is going to end and the recession is about to hit. Well, remember, 3.8, 3.9, we're talking about a very minute number and it's still within the healthy range. Then there was another increase in May 2024 and unemployment went up to 4%. Okay, still within the healthy range. Then June, it went up to 4.1, and then in July, it went up to 4.3. We still don't know what's going to happen next, but they are projections once again, according to the experts that created this table. And the projections are actually done on a quarterly basis. So remember, at the moment of this episode recording, we're recording this in September. September is not over yet. So that means we don't have September data yet. So according to expert, the forecast for what we should be expecting in this quarter closing up in September is that unemployment will be at 4.3%, still within the range of what's considered healthy. Then in the next quarter, it is expected to end at 4.1%, still within the healthy range. Then in the quarter ending in March 2025, unemployment is expected to be at 4.2%. And then in the quarter ending in June 2025, unemployment is expected to be at 4.2%. Still within the healthy range. There has been no massive increase. If anything, the unemployment has somewhat a downward trend. So according to the definition of a recession and looking at the information related to GDP and unemployment, when you combine them all together, you will realize that, and everyone has been waiting for this, a recession will not happen. Yes, you heard that right. A recession will not happen. What could happen is a possible economic slowdown. For those who don't know, an economic slowdown is a period in which an economy experiences little or no growth, usually due to a decline in economic activity. And it is also known as a business slowdown. This concept depicts exactly what we just saw in those graphs. I don't know. I still find it so hard to believe. If there's no recession, why does everyone keep talking about it? I don't know. I'm having a hard time believing you. And that's fine. Fear can take over. But let me show you this. Here is a chart provided by the Fed. And what you see here is the delinquency rate on credit card loans. Now, remember, everything has to be put into context. If you isolate the information, chances are you are going to panic. So when you look at this graph, I want you to first focus on 2022 and 2024. If you look at that piece of information alone, it is expected that you will freak out because that graph, it's going on an upward trend. That means that credit card delinquency is increasing from 2022 to 2024. But then when you zoom out and you put things into perspective, you will realize that the 2024 numbers is the equivalent of the number that you see at 1994. And in 1994, credit card delinquency rate was at its all-time low in that decade. Interesting, right? When you put things into perspective. And then let's compare that to the Great Recession in 2008. Look at that peak right there and the delinquency rate on credit cards. That number is massive compared to what you're seeing in 2024. So yes, we're going in an upward trend, but that's still too soon to decide. And based on the other charts, the information is just simply not justifying a recession just yet. Now, let's take a look at this chart right here, also provided by the Fed, and it shows the delinquency rate on single-family residential mortgages. Once again, let's focus on the number that you see in 2022 to 2024. It's almost flat, but you can easily see that it's going downwards. That means that the delinquency rate on mortgages is actually going down. Now, let's zoom out and let's look at things on a different perspective. Pay attention to what happened between 2008 and 2010. Once again, look at that peak. That number is massive. It's above a 10% delinquency rate compared to what you're seeing in 2024, which is below a 2%. So, according to the data provided by the experts, and from what I see it, I don't think there's going to be a recession. What could happen is an economic slowdown. Now, why do people keep talking about the possibility of a recession if one is not about to happen? Well, it's very simple. People are dominated by emotions, and people usually are not very well informed. But not you. That's why you're watching this channel. But most people who are not informed, they tend to panic because they don't have the tools, they don't have the information to put into context to help them make an informed decision. And that's why I created videos like this. So if you know of someone who could be at risk of making the wrong financial decision, share this video with them so that they can make informed decisions in the future, and I'm sure they will thank you for it. See you in the next video. Bye-bye.